Hello traders, it is April 14th, 11:31 EST. Netflix earnings later on today, and I would like to review what to expect on Netflix before earnings, and I would like to walk down memory lane for a year prior to see what played out on Netflix. So, this is Netflix now before earnings. This is a problem on Netflix key Fibonacci resistance in front of you. This is the end of the minor trend. This is crucial resistance. Doesn't matter how spectacular the earnings are, this resistance is a problem. Buying near this resistance, worst idea ever. Agree? As long as this key support respected, which is 315, we're dealing with two weak trends that are stuck in this range. So if we are to take a look on Netflix from prior year, this is the earnings on Netflix starting with December 2018. Consensus 02.4, earnings per share 0.3. Increase 25%. Excellent earnings. This is Netflix at that time. This is Netflix traders. June 2018, October 2018. It's a reversal zone. It's a sell-off area. All of the earnings from Netflix prior 4 are stunning and flawless. So why is Netflix selling off? Because it's a reversal zone. This is what Netflix does next. Collapses to key support. 315 is crucial. 315 is out. Netflix continue selling off. Netflix continues selling off until Fibonacci reversal zone, where Netflix starts rallying from. No surprise, not the place to short near, the place to monitor for long. And this is what Netflix had done since, skyrocketing from this level. But all the previous earnings, because price was at reversal zone, is the reason why Netflix sold off from 420 level all the way to 218, almost $200 per share. Stunning earnings don't mean a thing. Fibonacci reversal zone, Fibonacci resistance means everything. Every single earning is stunning. Every single earning above expectation. But since that event, Netflix sold off more than $200 per share until it reached Fibonacci reversal zone, where Netflix rallied from. So, this time around we are dealing with this crucial support 315. This time around we are dealing with this crucial resistance 376. No matter how stunning earnings are, this resistance was a problem in January. At the time of last excellent earnings, this resistance remains a problem at the time of this earnings. And this is not to be ignored, and this is to be respected. Agree? So, pay attention to price action, pay attention to Fibonacci. And if you understand where this level is, you never buy near. Crucial Fibonacci resistance, where price been stuck for the last 4 months, struggling to break through. And this is what we're dealing with in live markets on S&P. Crucial Fibonacci resistance, identical level is a problem. Where price stuck now? If I convert this chart to 5, what do you see? This is a problem. Just like Netflix. Just like Netflix, S&P sold off outside of decision point 2, close to reversal zone. Just like Netflix, S&P is struggling to the tick. Identical strategy, identical levels. What is the difference? This is day trading, Netflix position trading. It's all the same. The events on S&P this morning is exactly what Netflix had done since stunning earnings. not the place to buy, the place to exit. And that's a spectacular reminder. Market is flawless Fibonacci puzzle. If you understand where price action is, if you understand where trend inception is, where trend reversal is, you don't rely on earnings. You rely on Fibonacci only. All in advance. Never ever ever after the fact. Identical Fibonacci levels remain, no matter what you trade. And if S&P will pick up this steam and will finally skyrocket and break through this level, bullish rally will pick up this steam. And if not, nothing else is possible. Buying near this level, worst idea ever. This is what S&P had done for the last few days, collapsing every single time from this resistance. And this is where price been stuck for the last hour and a half. And this will be Netflix next. Struggling in pain at 376, as it's done during last stunning earnings in January, as it remains a problem. Again and again and again, crucial Fibonacci resistance. Buyers are weak on Netflix. And that's a spectacular lesson. Do not rely on earnings. Do not rely on fundamentals. If trading on earnings and fundamentals works, Netflix should have doubled and tripled in value. Instead, it sold off from 420 all the way to 220 level. And that's the reason why Netflix is struggling again and again and again, because Fibonacci resistance is a problem. Identical lesson on S&P this morning. Identical price action patterns. The only difference, risk management and trader psychology. And hold time. Price action patterns remain the same. Fibonacci remains the same, which will give you ultimate accuracy and ultimate profitability, not the place to buy into. And that will be Netflix next, at the time of the earnings, just like S&P right now.